everyone. Today we will go through few companies that way considered really good at some point, but over the period have not been performing well. We'll go through the stock chart and then we'll go through their financial fundamentals. So one of the companies, PayPal. PayPal uh, was demerged from eBay, and then after it started trading, PayPal owns Braintree. It's one of the gateway that they use, and it also owns Venmo. So the stock price has done like $35 to it's gone as high as $300, almost 10x, and then it has crashed after the pandemic back to 50 $60 now. Now in the same period, right, let's look at the fundamentals of the company. So let's look at the income statement first. So from 2015, 2016, from a top line of 9,000, 8,000 to um, a top line of $30,000 now. I'm sorry, this is not thousand, this is a million. So 9 billion to $30 billion now, and it's almost tripled, and the earning per share has also been growing. So from something like 78 cents to $3.85 now. So this also has um, quadrupled. So fundamentally, it's still growing. May not be at a very high pace, but it is going. So if you 2020 to 21,000 to 25,000 to 27,000, 29,000, it's been going. So now let's see the balance sheet of the company. It's now if you see the liability, the assets have been growing. The common stock retained earnings also has been growing. Um, so overall, the company is a strong, fundamentally growing company, just purely based on the numbers that we've seen since the past. Even in the recent years, when the sentiments are very low on PayPal as a business, it's been actually growing, um, although not at a great pace, but it's been growing. But um, the stock price is bit down. Another one of such companies, uh, let's say, let's go through Starbucks, right? We want to see Starbucks. Starbucks is at one point was all value investors' um, favorite to discuss. Starbucks franchisee, the moat, and all of that, which Starbucks truly does have. So Starbucks has a brand and moat that no other coffee company has. It gives aspirational value to people to go and have a Starbucks coffee, right? So if you see the Starbucks stock price has been crashing. It's currently at $73. The last time it was at $73, $70 was in 2019, March 2019, right? So let's see their financial. Starbucks, all right. Now, Starbucks revenue also has been growing, not at a great pace. Been going from 22 billion to $35 billion, um, and EPS has grown from $2 to almost $4. Now, even balance sheet, let's see. The assets have been growing. The retained earnings have been losing value, uh, but this is a good business. Like, uh, people's first favorite is always still Starbucks coffee to get coffee from, and the numbers show that as well. But the stock price is not doing good. These are basically sentiment game that are going on. Sometimes people are gung ho about the businesses. Sometimes they don't care much about it. So it's one of such high quality business that has been going through correction, so to say, time correction, you can say. For the last 5 years, the stock has been at the same price, although the fundamentals have been improving. Uh, One more, few more. So one of uh, the lockdown share, the pandemic share that did a big name was Zoom. Once the pandemic started hitting, everybody started using Zoom, and the stock went from something like $70 to 500, $600 if you see, $560, and then it crashed back to $65. But now let's see, um, what has the company been doing in terms of their financials, right? So let's say June, ticker symbols would be ZM, financial. So right, so it's been actually growing at a pretty decent pace from 330 million to this is 2 billion, and then 4.5 billion dollars, and EPS as well um, have been growing to 2.12. So let's say June stock market cap. So at current valuation, it's at a 19 billion market cap, but it's, if you see here, oh, it's been doing 4.5 billion revenue, and which is growing. Although it's been stagnant for the last 3 years. Um, it's actually doing good, and they have a suite of products which they are developing as well. Good source, one of the good source to read about all of this is the 10K. Um, so yeah, this is one of such stock that has been going through a correction. Although there is no way to say these companies will do good in the future. These are technology companies, so they are uh, always open for disruption, very highly so. More than the legacy companies, the technology companies are, especially the platform companies, they always want to disrupt these individual product companies. So Microsoft, Google have suite of products, and they have billions of users that they can um, uh, motivate their users to use such kind of products from their platform, not necessarily from Zoom. So of course these companies are always open to disruption, uh, but like one of one of such example I found, which has been back to their pre-pandemic stock price, and one and few other stocks that I was a Chinese company. It was pretty famous among the value investors, not as much so now, but Alibaba is available at the price of 2015, right? But mm, if you see, uh, they have been buying back their stock, although they are not growing. They have been uh, buying back their stock a lot, and they are aggressively buying, and the revenue is growing. The EPS also is growing. So 2021, the EPS was $8, $48 now, probably due to some dilution, but EPS has also been at a decent price, and the whole market cap, let's say, is like market cap in USD. Okay, this doesn't. So it's around um, $200 billion. All right, and it's been doing 126 billion dollars of revenue. So almost two times sales. This business is available. Of course, people are afraid of China as a company, China as a country to be part of. So these are mainly focused on Chinese market. But yeah, this is one of such company which has been beat down. Uh, Although there isn't much break on their revenue, they have decent revenue that's been going on. They have EPS. They've been buying back a lot of shares. Eventually, those EPS will improve and stock should improve. Although it's been there at these levels since 2022. Uh, of course, these companies will test your patience, but that's what value investing is for. One of another company I found very interesting was GoPro. So, if you see, uh, at some point, like GoPro, even now is a pretty famous brand. It's available at 192, almost $2, and GoPro market cap, if you see, is like 292 million dollars, right? But let's see GoPro GoPro revenue. So if you see, company has been doing $1 billion of revenue since last 3 years, and they are yeah, see, the EPS has been deteriorating. So operating income, the expenses has been high, and then they've been not able to manage the margin and so on. That's why uh, the EPS is negative and stock has been beat down. So this is one such stock which is really crashed. Probably the fundamental business is deteriorating. Uh, Camera as a business, adventure camera has lot of competition, and they are not able to maintain their moat in this business, which clearly shows over time in the EPS value. Although the revenue has been there, they've not been able to maintain the margin. It's a negative price that has come down. All right, that's all. These are the companies I want to discuss about. We'll come up with some more discussions in next week. Thank you. Bye bye.